Good morning. This is the Perivis Daily Wrap for Wednesday, February 4th at 7 a.m. Indian markets are coming into today after a powerful risk-on session yesterday, driven by a single clear catalyst. But the tone from overseas turned a bit more mixed overnight, which could test how much follow-through the rally gets today. Yesterday, benchmarks logged one of the sharpest single-day gains in recent weeks. The Sensex finished at 83,739, up about 2.5%. The Nifty closed at 25,727, also up about 2.5%, after a gap-up open that largely held through the day. Market breadth was strong, with most stocks advancing and no sectorial index ending in the red. Realty, power, utilities and capital goods were among the leaders. The big driver yesterday was the India-United States trade deal headline. The report said the United States will cut reciprocal tariffs on Indian goods to 18% from 25%. That reset sentiment quickly, and it showed up in the day's leadership with a broad rally across cyclicals and rate sensitives. Overnight, the most important global cue was from Wall Street. US markets ended lower on Tuesday with a clear rotation out of technology. The Nasdaq fell about 1.5%, the S&P 500 was down just under 1%, and the Dow slipped about 0.33%. The key point for Indian traders is not the index drop by itself, it is the sector tone. The selling was concentrated in tech and software, while pockets like steel, energy and housing were relatively stronger, which lines up more with value and cyclical leadership than with high growth momentum. Now to what changed since the last Indian close and what could matter for today. First, the trade deal remains the core story, but details still matter. Market optimism yesterday was based on the headline tariff cut. Separate reactions cited in reports suggested the move is credit positive for labor-intensive exporters like textiles, apparel, gems and jewelry, and that engineering exports could also benefit. What stood out was the repeated caveat that the sector-wise contours are still awaited. So for today, watch for any clarification, formal text or sector-specific commentary because that is where expectations can get refined. Second, currency was part of the story yesterday. The rupee strengthened sharply, described as the best performing Asian currency on the day, rising around 1.5% to the strongest levels in about 2.5 weeks. That matters because yesterday's narrative included expectations of renewed foreign inflows, and a stronger rupee tends to reinforce that confidence at least in the near term. Third, there were policy signals in the background that helped risk appetite. One report cited the Finance Ministry Secretary saying the Finance Ministry is conducting inter-ministry discussions to raise the foreign direct investment limit in public sector banks to 49% from 20% with the stated goal of strengthening capital. That is not a decision yet, but it is a live policy thread the market is clearly sensitive to, especially after a broad-based rally. Also in the macro framing, S&P Global Ratings was cited, saying it is confident the government will meet the fiscal deficit target of 4.3% for financial year 2027, despite a projected dip in goods and services tax receipts after rate streamlining. And the finance minister has reiterated the budget's emphasis on investment-led growth while also defending the proposed increase in securities transaction tax on futures and options. The minister's line, as cited, was that the higher tax is meant to act as a deterrent against excessive speculation. Now, turning to corporate and policy signals that could shape stock-specific action today. On results, 3 names stand out for size and surprise. First, Adani Ports reported quarterly numbers with a split picture. On a consolidated basis, net profit rose about 21% year-on-year to roughly 3,054 crore rupees, and consolidated income was up about 21% to about 9,939 crore rupees. But on a standalone basis, the report showed net profit down nearly 30% and income down about 10%. The market will likely focus on what is driving that divergence and whether it changes the near-term narrative for the group, especially after Adani names were among the biggest gainers yesterday. Second, Varun Beverages reported a strong quarter on a consolidated basis. Net profit rose about 36% year-on-year for the December quarter, with consolidated income up nearly 15%. Separately, the company also announced board approval to acquire up to a 30% stake in a solar power special purpose vehicle in Haryana, a small ticket investment but one tied to captive power sourcing for its facilities. Third, Thermax reported a sharp jump in profit. Consolidated net profit rose about 76% year-on-year for the December quarter, while consolidated income grew a little over 5%. That is a notable operating result because the profit growth is far outpacing the revenue growth, and traders will look for what that implies on margins and execution. Beyond results, there were a few corporate developments worth keeping on the radar, mainly for stock-specific moves. Adani Enterprises said its defense and aerospace arm signed a memorandum of understanding with Leonardo, aimed at building an integrated helicopter manufacturing ecosystem in India, including phased indigenization and maintenance capabilities. This is a long horizon story, but it adds to the defense manufacturing narrative that the market has been rewarding. In pharmaceutics, Natco Pharma received tentative approval from the US regulator for erdafitinib tablets, a generic version of Balversa. The report cited estimated US sales of around $60 million for the product over the 12 months ending September 2025. Separately, Sun Pharma Advanced Research Company said it secured a rare pediatric disease priority review voucher associated with a US approval for Sezaby, and said it intends to use the voucher to accelerate its pipeline. These are not broad market drivers, but they can move their respective counters. In autos, Maruti Suzuki reported January production up a little over 9% year-on-year, with a sharp mix shift. Utility vehicle production was up about 42%, while mini and compact production declined year-on-year. That mix is consistent with where demand has been, and it will be watched alongside the broader consumption narrative. And early this morning, a market preview item flagged a few names that could see action today. IRFC was cited for a tripartite memorandum of understanding with the Port Authority and Sagar Nala Finance Corporation to explore financing for port and multimodal projects. HCL Technologies was cited for being selected by Hong Kong Aero Engine Services to transform maintenance and overhaul operations, deploying an asset management solution integrated with SAP. And Sigma Advanced Systems was cited for a long-term partnership to supply radar and electronic warfare subsystems for counter-drone systems, with the report indicating about 250 crore rupees of contracts for the first year. One more item for today's calendar. In primary markets, an SME initial public offering for Brandman Retail opens today, February 4th, and closes on February 6th, with a price band of 167 to 176 rupees per share. That is not a broad market driver, but it can draw attention in the SME space. So what will markets watch today? First, whether yesterday's trade deal rally gets confirmation through details or whether it cools into a wait-and-watch session. Any clarity on sector-wise tariff treatment, timelines or implementation language would move exporters and industrials. Second, watch the rupee and any flow signals. Yesterday's currency strength reinforced the risk-on move, and markets will track whether that stays in place. Third, keep an eye on the global sector queue after the overnight US rotation out of tech. If that tone carries into Indian trading, leadership could stay with domestic cyclicals, while information technology may need fresh triggers. Closing note, the takeaway coming into today is simple. India's market just repriced sharply on a trade headline, and now it needs follow-through from details and flows. After a 2.5% jump in a single session, the next move is likely to be led by what gets confirmed, not what gets assumed. That is the Perivis Daily Wrap.